Ladies and gentlemen, welcome to the High Performance YouTube Trading Channel. I am your host, Joshua Salvetti, and today I am here to break down a couple concepts, right, that are going to help you make better decisions on the market. So before we break into the lesson, make sure you follow me on Instagram, right, the High Performance Trader. I break down tons of trades, tips, tricks, right, things I'm looking at. It's a super valuable resource, right? So if you haven't yet, make sure you follow me on Instagram. I will give the most resources I can, new videos when they drop out, right? New content, new resources, new tips, new tricks, and how to crush this market using supply and demand analysis, right? So for today's lesson, I basically wanted to do a quick rundown of the week, right? I know a lot of people in my Discord, right? We've currently just had a weekly recap, but for those of you that couldn't make it, I want to make this video for you, just touching on a couple different topics, a couple different subjects, right? Things we did this week that made us money, and things we avoided to avoid losing and making bad trades, right? So I truly, for all you that know me, I truly believe in simplifying the process as much as possible, right? You look at my charts, what do you see? Well, let me tell you what you don't see. You don't see tons of indicators. You don't see tons of lines. You do not see confusion, right? Our brains are meant to only be able to handle so much mental capital, right? You can only process so many ideas, so many different strategies at once. So I had a trader ask me, right? He was like, hey, I'm in this trade, take a look at it, right? And the first thing I noticed was the excessive amounts of lines and indicators, right? And these are things you don't want, ladies and gentlemen. The main thing you want is supply and demand zones, right? And basically what that is a large seller versus a large buyer, right? And you want to capture these market imbalances, right? Because they move like magnets, whether they're double tops, whether they're double bottoms, and whether they're end of day rejections, right? So first thing I want to break down, right? A question I had over the week was, how do you predetermine your stop loss? Basically, how do you calculate your stop loss? How do you find it? And how do you know when it's triggered? So I have a perfect example here on Friday, January 6, 2023. The market was extremely bullish during pre-market, right? We had excessive buyers come in and kind of cap out at this 384 level, right? And then we sold off. So my goal here was, let me just pull it up on something a little bigger. My goal was, if price can rip into pre-market high, right, which is a supply zone. Why is it a supply zone? Because the last time we touched 384, we got a violent sell-off, right? Sellers came in and took the price down. So that is a validation for a supply zone. So in this trade, I got three areas mapped out. I have my pre-market high supply, right? I have my demand, which was yesterday's prior demand zone, right? And then I have end of day, right? So with these three zones, I'm looking to make plays, right? And I'm not saying there's not more than three, because there is, but I'm trying to keep this simple. There are three zones that I'm focused on: pre-market high supply, demand, right, and end of day. And when I mean focused on these areas, I mean I am looking at these areas for price movements, right? I'm looking at these areas for volume, right? When anyone says it's volatile, that means there's a lot of volume in these areas. So these three areas are very volatile, right? Pre-market high, end of day, and demand. So as the market opens up, we rip right into supply, which is our pre-market high, 384. So where would I make my stop loss in this trade? And the answer is whenever it makes a higher high, right? So what is a higher high, and why do I want to get out when a new higher high comes? Well, basically a higher high is when price goes above its previous high, makes a higher high, right? So here we got a higher high, or a high of 384.04. So if price hits 384.10, right, anywhere in this vicinity, now sometimes it goes a little bit higher, but if the candlestick closes on the 1 minute above 384.10, that's my stop loss. That's when I get out of the trade. Right? You need to keep these extremely tight. You could always re-enter your trade, right? But the main thing you don't want to do is enter this trade and hold and let it continue to rip up to 385, 386, 387, right? So in this case, my stop loss is placed right here. And what that means is when my chart pattern is proven wrong. Okay, so my chart pattern I'm trying to trade right here is a double top, right? Which basically means once, twice, 384, 384, sell off, right? Not 384 and then 384.10, right? Or 384.10. That means as price has proven my chart pattern hypothesis incorrect, that is my stop loss. A lot of people get this confused, and they try to pin an exact dollar amount on their stop loss. You cannot do that. You can, and if that works for you, that's okay, but I don't do that, right? Because the market is very good at false breakouts, and it can't be pinned down to an exact number or an exact cent. Sometimes it does work out that way, but more often than not, it does not. So the way I set my stop loss, right, is wherever price will prove my chart pattern or my plan wrong, right? And that's why it's so important to have these areas predefined before you enter the trade. These areas need to be already figured out in your mind, right? And I took this trade, and what was going through my mind is if I enter this trade right here, right, and price rips up to 384.30, I'm out. That is how much I am willing to risk before I lose money, right? So in this trade, it rejected completely, and we took her down, right? And now remember, I have 3 areas I'm eyeing. So as I took this trade down, I got out and I made my money. Check, right? I do not let that affect my trading plan, right? Because remember, I have 3 areas mapped out, and I am looking for each area to have volume or to be volatile, right? That helps me identify that reversals happening, right? So first things first, this candle comes down, touches end of day perfectly, and rips, right? That was my first indicator that buyers were showing up to the scene, right? And I was already kind of in a bullish mentality because of all this volume pre-market, right? So right there we get another can't see. You get another candlestick rejection, right? And that's why it's very important to let the market tell you your story, right? So how do you interpret the market story? By understanding the candlesticks. The candlesticks is the market's language, right? And I know I made a video on this before, market auction. You need to be able to understand the candlesticks. If you can understand the candlesticks, you don't need anything else, right? The candlesticks will tell you where buyers are, where sellers are, if you look at them in correct zones, right? So we get a perfect candlestick rejection at end of day. Clear indicator to take the market long. That's exactly what we did, right? And we targeted 384 and higher, right? Why did we target 384? Because 384 is where, if it makes a double top chart pattern, my hypothesis is now proven wrong. So do you see how I did this going down and going up, right? And in this case, when I go long here at end of day, my stop loss is going to be below end of day. Because if I get in this trade, right, and the market starts to turn and then come down, I'm out. I am out once a candlestick closes below end of day. And what I mean by candlestick close, I mean if you're on the 1 minute, it needs to end in 1 minute underneath end of day. That is my stop loss. It is extremely important to keep these tight, because it's a trader. Becoming a consistently profitable trader isn't exactly about your good trades. It's about how quick you can cut your losses on the bad ones, right? So I just wanted to make a video talking about this, guys. Once again, if you are looking for a great resource, this is my Instagram. Follow me on Instagram, like, comment. I drop all my videos. I drop pre-market plans. I drop tons of trading tips and tricks that help the high performance trading community make great decisions. So that pretty much wraps it up for this video. Ladies and gentlemen, the Discord is hot. We are doing amazing. If you want to be a part of it, I will drop the link in the description below. Just go ahead, click it, put your email address in, and we will get in. That's all it takes. You will be on the Discord, and you will be able to see my pre-market analysis, right? You'll be able to see all the trades I call out. There's tons of great feedback going on right now. I do a lot of trading metrics, which basically means I collect data on our trades that we take and then calculate the probabilities for success. So that wraps it up, ladies and gentlemen. Joshua Salvetti, High Performance Trader. I will see you there.